Hey, what is going on? This is Mike Clark, Keys and Knowledge. I'm excited for this interview. You guys are going to learn a lot about the VA home loan. We're going to learn about the differences between conventional. And then we're going to learn a little bit about Kaneen Manuel as well. He was a loan officer with the Change Company. So this is a interview you want to participate in. If anyone pops in, definitely don't hesitate to put a question, comment, and let us know. All right. But without further ado, let's go right into it, Kaneen.
Yes, thank you for having me. I'm excited to be here. I know this is take two, but I'm all for reaching that perfection.
Yes, yes.
uh, yeah, but a little bit about me. So I'm originally from Las Vegas. Yes, people live there. I wasn't on the strip of Las Vegas. I lived about 25 minutes away from it. But yes, it's my address was Las Vegas. I enjoyed it. Great time, great place to live up. Then from there, when I graduated, I went to West Point. Went there through the prep school for 1 year, then did 4 years at the academy. Graduated as with my environmental science bachelor's, and then from there did nothing with environmental science. Became an engineer in the Army. So mostly what I did was route clearance, and then subterranean operations and other fun random missions they put me on. Uh, from there, then I got out last year, and so I was the reason I got into finance, at least since obviously I have no finance background. I started investing while I was in the military with my VA loan, and from there I just scaled and enjoyed what I did and helped my soldiers enjoyed, or at least my soldiers always had questions, and so besides like the random questions that come in daily, one of them would always like talk about real estate and stuff like that, and so I like to educate, and that just transferred over when I said, well, why don't I'm already doing it now, so why don't I help be a good advisor for mortgages and VA home loans. It's not the only loans I do, but that's mostly like what my network consists of.
No, no, that's perfect, man. You were a real Army. I'm not gonna lie. You were doing route clearance and all that good stuff. West Point, man. You were gonna be a general, man.
Yeah, no, I had fun with it. At least like our vehicle, because I was with the Bradley unit, and so I had the nice vehicles with AC outlets inside. So I was chilling whenever we had to go do hot missions. So I liked it.
Hey, ain't nothing wrong with that. So I'm
Mhm.
gonna jump right into it. And what I want to say is, what exactly is the VA home loan, and how is it different from
Yeah.
conventional home loans?
Okay, yeah. So there's one way it looks at. So when I first started out, I didn't know that there was a difference in mortgages. I just thought like it was the difference of where the money's coming from. All the money is really coming from some sort of financing or a bank, but the way that it works is what makes it a VA loan versus a conventional FHA or some other type of loan, which is like conforming or non-conforming loans, which is called like non-QM. Um, Basically, it comes down to the fact of who guarantees the loan. And what that means by who guarantees it, the money doesn't come from the VA. That's a common misconception. It's that the VA says, hey, this soldier wants to apply for a loan. We will guarantee that if they default on the loan, we'll guarantee up to this much. And that kind of feeds into how much they calculate of like, well, what's my loan limit? Basically, there is no limit. But the way that we work it is there's no limit that the VA will guarantee on it, except for the way that it works kind of backwards. So let me rephrase it. So we as a lender will give as much as makes sense for your finances, and so we'll limit it to the conforming limit of 806,000 is the one for this year. They bump it up every year because things change, and so this year they bumped it up to 806 and some change. So that's kind of what the VA caps it at, unless you live in a different zip code that allows a higher limit because of home values.
No,
But
exactly. And I'm glad you said that because what most people, I've done my research on it, and other people, of course, they get
yeah,
misinformation and they believe, oh, I got the VA home loan, I can buy $1 million home, I could buy $2 million home, and there's a reason for that cap. And not only that, you have to be approved for that property. Like the VA is
yeah,
not just giving you a $2 million home or $1 million
yeah,
loan.
yeah.
So no, you're right. That's a common misconception. So I
Mhm.
would say, who qualifies for the VA home loan, and how can someone confirm that they're eligible for this particular benefit?
Yeah. If you've gone through basic, you've basically met the original requirement if you're active duty. It changes based off of your active, or if your status of veterans and stuff. Usually, as long as you did your basic time for 180 days and some change, then you're usually applicable to it. As we kind of get into different statuses and time frames, it changes, but that's like a good rule of thumb of if you went through basic, you usually have the benefits that mostly apply to you.
And then I would say, what are the biggest, what's the biggest benefit by utilizing the VA? I mean, I got my opinion about it, but what do you believe is the biggest benefit
of the VA loan? So that's where when we're mentioning different loan products, obviously there's a time and place for every loan. Not everyone's finances are the same. VA loan is one of the most powerful loans you can use. That loan specifically has the no down payment. There's still closing costs you got to take care of, but at least there's no down payment that you have to pay for it, while all the other loans require down payments. There's some other random loans that some people say like, oh, there's going to be zero down, but that just means sometimes like the builder, new construction stuff is big right now, where the builder will say, hey, it's a zero down because we'll pay for it. And all that means is in a normal transaction for a FHA or conventional, if you do the 3.5 to 3 or 5% for the conventional, then basically you have to have some sort of payment. And that payment comes from either the builder, which the sellers can give you that in concessions or contributions. And so that's where VA just bypasses that. So it makes it a super powerful loan for people who don't have that large amount of money saved up to purchase an asset.
That's a great point, Kaneen. And I was going to just add to it is like you said, there is closing costs. However, if you get a dope realtor, you're getting concessions.
Yeah.
You're figuring out a different way to negotiate this deal where, I mean, if you do have to bring money to the table, it's little to no money. So
yeah,
definitely keep
I
that
had my last deal I did, the realtor got all the contributions and concessions, and the guy came in with, I think it was $500 to buy the house.
Oh,
and that was a $235 purchase price.
Where they doing that at?
Yeah, exactly. Where it's like he did put his earnest money down, but they refunded all the closing costs and it pays it down. So yes, you do have to put earnest money into the deal, but you get it on the back end when that money comes back. So sometimes you actually get a paid check when you buy a house if you do it right.
And I want to add to that point is like you said, there's no down payment, but there are other expenses. There's other components that come to getting under contract. So just like Kaneen was saying, you have an inspection, you have appraisals. There's other little fees that do have to come out of pocket. However, compared to a 25%, 20% down payment, if you're using FHA 3.5, like the VA is allowing you to come in with little to no money. So it's a benefit for you. For all your service. Did you want to add something to that?
To add to that point, I know we mentioned it last time, but there's like I kind of break down the transaction itself into 5 steps. The 5th step really continues for forever on the life of the loan, but basically you start off with what do I qualify for and searching for a home. So that's like the initial steps you take. And a lot of people they're asking, especially if they're forward thinking people, then they like to know, well, when should I try and purchase if I know I have a PCS coming up like next year? So you should start looking around 6 months out, try and get pre-approved, see where you're at in case you do have credit you need to fix or some sort of savings you do need to try and pay up, because sometimes there's things you have to pay off beforehand. So especially if you want to try and reach that like top purchase prices to the home that you want to get. So that's really 6 months out is when you want to start looking. And then as you get closer, like actually starting to select and put offers about 2 to 3 months away. And then obviously depends on what your PCS leave is going to look like and stuff like that. So it helps to do about 6 months out, talk to an advisor, structure it for your specific needs and for your family if you have a family that needs to move. So I'd say that. And then the second step, once you have that, well, we were talking about that 2-month, 3-month time frame. That's where you now lock in that home, you're under contract. And then the third step is where the loan process begins. That's the fun part where I do all of it. You don't really see all that much. I just ask you for documents as someone like a buyer. But then that next step is we close. And the 5th one is we're off to home ownership. So kind of think of it in that easy way, because home ownership can be a confusing thing because there's so much steps, paperwork, all the regulations that go into it. But that's where you have 2 great advisors that are here to help you. So
no, absolutely. Now, when it comes to that step 3, the paperwork, that's the scary part. Most people start fearing like, well, but what are they going to ask? What is one of the, I guess, the most difficult piece of information that they have to give to you, or that you really, really need, and you're finding that is more difficult than it need to be?
So when it comes to it, the hardest part's always credit. So if you think about it, right, you're applying, this is the whole point of credit, is to get it and leverage debt. So using your credit to then leverage a larger asset, that's why it's the crucial part. So that's really the decisive point in the battle of getting a home. Because when you're sitting there, it's like, well, all the rest of it I can qualify you off of, or have like contingencies. There's always little nitpicky things that we have to try and screen and trim for. But credit's the big one, because sometimes we have bankruptcies, we have other like crazy finances, because life isn't always perfect. We don't know how to use finances for most of us when we're in the military. So there's something in the closet, and so you always have to try and, like, that's where we have to really get nitty gritty with things. And yes, it can be difficult, especially when you have to bring up some past history events, because then I see things sometimes 4 or 7 years out, and 7 years is usually the credit time frame. So if you have something that's within 7 years, it's going to be on that credit report.
No, and I think this is a perfect segue into misconceptions. What are some of the biggest misconceptions people have when it comes to the VA home loan?
The zero down thing. They're always confused when they have to make a payment. So,
it's not free, guys. It's not free.
Yeah. So yes, you are buying a home. It's hundreds of thousands of dollars. So there's going to be some money involved, but we try and keep it as minimal as possible. So there's some ways around that, where there's down payment assistance, DPA is what it's called. So Texas is a big thing on DPA assistance, but then there's another part where, at least specific for veterans, is property tax exemption. That leads into another misconception for people, because some people don't even know that you can actually, if you have some disability above 30%, then you can get some percentage off of your property taxes in Texas.
There you go. No, that's perfect. And in your opinion, because I ran into this issue when I was using a VA home loan, not every financial institution is just built the same, and some actually deter it, and they don't like dealing with the product. I don't know if you ran into that issue, but could you speak a little bit about that? If there are financial institutions that don't use it, why would they not want to use this program?
That don't use a VA home loan?
The VA home loan, yes.
Yeah, there's always, so when you get into larger institutions, what do they like to do? They like the factory products. They love cookie cutter situations where, hey, I want to try and package this. They only have people who are specific to those kind of things. So, you're going to be talking to someone, especially when you're using like USAA, PenFed. Not everyone's trained on, unconventional routes to solve a problem. And so you're not going to get that, experience that you need to, like, hey, we can actually alter this. We can bypass this way. We can kind of do other things. And so that's why it's helpful to get people who are more familiar with those unconventional routes, because then you can always do things around. So look, what's an example, right? I had a VA buyer come in. He's a student out here, and he wanted to purchase a home. He just got military. He was a Marine, but which is fine. Maria, But so he's a student out here, and there's not much income coming in besides he's getting his GI Bill, and then he's also getting disability. We can't use GI Bill. Anything that's meant for education isn't meant to be for housing. So you always have to keep that in mind. That's another misconception some people have if they have their GI Bill, or if they're going through their education. Like, oh, I'm making this much money. Why can't I use that to prove income? It's not valid income for purchasing a home. So I had to basically switch him around. So we didn't go VA, even though it is a powerful loan, but it doesn't fit everyone who can use it. So he could use it, but it was better to go FHA. We got him into down payment assistance, and then it's almost priced the same if he came with a couple $1,000s, but that was it. If you're buying a home for $2,500, that's pretty good for me for a starter home. So
no, I was gonna say that's great. That is great.
Yeah.
Because I want to hit that point, because I don't believe people understand. This might be their first time at the closing table, especially if they're first time home buyer, first time using a VA home loan. So they might think this is normal to bring $2,500 to a closing table. On the contrary, my man, on the contrary, I mean, I would say average, maybe 20, 30, maybe 40,000 got to bring to the closing table on certain deals. And so, like I said, the VA home loan, it's one of those products that it keeps on giving. And when you say, what does the military do for me? Well, this is what they do. This is what they do. You know, they're
They won't tell you about it, but you got to research
yeah,
it.
you gotta do your research, like you said, and that's what I
Yeah,
want to talk about. Is what I like about Kaneen. You know, I didn't meet him in the military, but to know that he was an officer explaining this to other soldiers and introducing it, man, that could have sparked something else on the financial literacy side of that guy immediately. I didn't have a lot of leaders that did that. I didn't. I was telling Kaneen, I didn't hear a lot about this until I made E5 and E7 slots, so now I'm around officers, and yeah, that's what they're talking about. I'm
yeah,
sorry, that's what they're talking about. They're talking about finances. They're high level conversations sometimes. I mean, yeah, they do some stuff we do as enlisted, but
yeah,
majority of it's high level financial conversations, and I really appreciated that. Um, I do want to go right into the overall cost because you kind of hit it. There is what's called a funding fee, a VA funding fee. Can you
yeah.
break that down?
Yeah, so the way that that works, there's a VA funding fee. So other loans don't have a funding fee. They just see it as most of your funding fees are paid with the down payment. But because the VA offers this, there is a funding fee. That's usually it's financeable, so you don't have to worry about paying it up front or at closing. So you can throw it at your loan. Some people prefer to pay it off, so they don't have that added payment on it. But let's look at it in the numbers wise. So if you're non-exempt, I'll talk about what that looks like after, but if you're non-exempt, you have to pay the funding fee, and that's about, for your first use, 2.15%. And then it's up on your second use. So once you hit that second use of it for your VA loan, it bumps up to 3.3. And this is assuming there's no down payment. This is where you can look at other options of, well, some people like to pay a down payment and then it brings that percentage down. So like for your first use, it goes from that 2.15 to 1.5, which I, as the advisor, usually don't suggest that because it doesn't make sense to put it towards the funding fee. It makes more sense to just throw it out the loan overall, because if you put that the actual percentage amount of how much you'd be paying and how much you're saving, it doesn't make sense for your return. So usually I'm not a fan of it, but financing it usually makes more sense. So that's why when it comes to that underlying how the loan works, right? It's 100% finance loan. What that means is I don't have to come with the down payment, and so you're technically underwater first couple of years. So if you want to put a down payment, you want to not be underwater on the value of your home, then it makes sense to put that extra money down. Most people don't have that money on hand, and so we just say, okay, we'll just, if you can, make a couple $100 payments over time, and you'll speed up that process to get more equity in your home, so you're not, over leveraged on that asset.
No,
Um,
absolutely.
yeah, and then I guess to speak to the point of the exemption, real quick. So
Okay.
the way that the exemption works is if you have any disability rating, then you can be exempt from the funding fee.
So
Um,
10%, 20%, 100% doesn't matter.
as long as you have a service-connected disability rating, then it waives your funding fee.
Okay, perfect. Yeah, because that's another thing most people say, and it's gonna roll into the next question from the ask, but you're super knowledgeable on this product. You've done your research, you understand it inside and out. So that's why I want to say, when it comes to veterans and active duty soldiers, what should they look out for if they're choosing a VA lender? If they're choosing a VA lender, and they're not going with you for whatever reason, I hope you guys are going with the Change Mortgage Company. I hope you guys are. But if you
Yeah.
don't, what should they be looking out for? What questions should they ask?
So a lot of times, right, is knowing your benefits. So we'll get, I'll have clients who previously they used the loan and they didn't know that the fee could be exempt. So the way that you can check that is on your COE, the certificate of eligibility. That comes from the VA. That is your paperwork. Lenders can request it. So like you might not see it as the client, but always ask for that so you can have it on hand and it'll say on there exempt or non-exempt from the funding fee. So that's one way you can check. So it's a good way to check for your actual lender. Knowing what they're doing is just that simple part. The next thing is basically checking the loan estimate. What that is, it's the initial disclosure that says what all the fees are. So they have to itemize everything that goes into the transaction. So yes, you'll get pre-approved. Some will say, oh, we'll get you at like a 6% interest rate right now. That's probably about 0.25 over the national average. So sometimes the way that they do that is they'll give you a low quote, but if you don't look at the origination fees or some other way, they're actually using those fees to buy down the rate. So technically, it's not that they're giving you an at par rate that's amazing. It's they're quoting you low and they're charging you for it. So yeah, that's one way that usually I just have people send me the estimate. I'm like, okay, that's where the fee's coming up, versus, oh no, like you're giving me a higher rate without charging me points. So it's every rate has a cost to it. So keep that in mind when you're looking at it. Like, yeah, they might quote an awesome short rate for you, but there's always money that's tied into it. So it just comes out as to how they charge you based off the institution.
Oh, absolutely. No, that's great information. And so I want to move right into this point. What makes El Paso and Fort Bliss a great place to use the VA home loan?
Well, it's cheap. That's one way. So
This is
Fort Bliss,
Texas. This is
yeah,
Texas, yeah, because all
I know,
things San Antonio, I mean,
yeah.
that the market over there is crazy. El Paso is it's perfect.
Yeah, so Redfin Stats is one of the places I like to go. Redfin Stats, if you just type in any zip code you're moving to or PCSing to, that's what I would always look up when I was moving, because then you can look up a median home price, and then they'll give some market statistics for you. So that's at least like a good way to look at a rule of thumb of, hey, I'm moving to Fort Hood or sorry, Cavazos. I'm moving to Sam Houston or going anywhere else outside of Texas. You can look up those specific zip codes you're interested in, and then move that decision to, when you're shopping on Zillow for funsies and, scrolling in the middle of the night. So that's one way that I like to use that as a rule of thumb for people.
No, absolutely. Like you said, I mean, El Paso to me, one is growing. Two, they're doing it's so many new changes coming out. And
Yep.
look, I'm gonna go put a small plug in. Just know that this realtor over here is always at all the city council meetings,
He
all
is.
the meetings, and I'm up to date. And so many changes are coming, and that's why I really encourage, if you are coming here, this might be the time to buy, because the
Yeah.
equity that you might end up getting overall if you stay here, if the property ever becomes a rental property, I believe the market's gonna go up regardless,
Yeah.
just
Yeah.
from all the recent changes.
On top of that, so that's another thing that to answer your question as to why El Paso is amazing. So if you actually look at there, I forgot what book I read a while ago, but they talk about how cities have geographical limits. We do here because we're brushed up against the border. So like there is limited space as to like desirable location. So yes, we are building and expanding out, but there's only so much of valuable locations.
Yeah.
So we do have that limit. Second, we also have, if you look at an aerial view too, like Juarez is an international city that's abutted to us. So like we have people who go over there and work. We have people who come over here and work. We have international trade routes that run through here. We're a big hub. So there's a lot of large institutions like Pepsi, Coca-Cola, Amazon. We have some aviations, and also like most car productions are produced or part of them are made in Mexico. That's why tariffs are such a big thing that are bumping up, and we can talk about that after. But that at least has a large amount of transactions and money flowing through here in goods. And so we have that always props up El Paso. So it might be a smaller like home price, but we are a stable market when it comes to everything else. We don't fluctuate at all because there's so much that goes on here economic wise, where it's a stable city ever since, its conception on it. And then lastly, we have Las Cruces, which is about 45 minutes if you're on, downtown central area. So it's another city that's New Mexico. So that's three cities almost that are tied to each other, international, interstate. And so it really helps prop up the economy here for its stability.
No, absolutely. Those are all great points. And now, Kaneen, if someone listens to this podcast, they're hearing all these great things, and they're like, well, I'm not ready. What can a veteran do right now if they're thinking about buying within the next 6 months? What should they be doing?
Easiest thing, most people who are like, yeah, I'm all about my credit, they'll get it from a third party commercial credit reporter. Best way to do is get your free credit report. That's something that's provided, like government mandated. You can get it for free online. I have the link. I don't know it off the top of my head, but it's a free like asset to you to look at. Like go and look at that and see what your credit report is. Most people don't actually, they say like, oh, my credit is around here, but that's because they had some random institution tell them and not them actually checking. So that's where like I'll go in and I'll tell people, I'll find like some random $500 collection that's been growing from when they didn't return their modem after PCSing. So yeah, exactly. So if you look at small stuff like that, where hey, 6 months out, it's the best to look at the credit and make sure that you can start fixing things like that, because sometimes there are disputable charges. If you have collections, if you have charge-offs, you can try and negotiate solutions for it. And that's something that I like to do, at least because I'm a nerd and it's fun. But like it's cool for me, so I like to go look at it and help people like see the situation, because there's simulations we run, and then print it out for the people so that they can see what it is, what can they do per dollar amount to actually reflect that in their score. So that's something that you can do for free, just looking at your, like, it always says on your credit report, like, what are the things that are hurting it. So you might not get that cool simulation thing, but at least you can start looking there and building your own solution.
No, and that's a great point. That's a lot of value being added immediately before a transaction even starts. And I tell a lot of veterans, anybody, even if it's FHA, it doesn't even matter, that's one of the stopping points that stops anybody from even getting started is their credit, and they're overthinking it. They're saying, well, I got to do this, I got to do that, I got to do that. I said, how do you know? How do you know? And that's the beautiful thing about Kaneen and his company. They're not just going to give you a denial letter and send you on your way, and then you just not going to know what to do. Can you speak a little bit about that credit process and how you know?
Yeah. So it's not every loan officer is created equal. Same with agents, same with insurance agents, because we can all get licensed. Getting licensed was like, there's a bar you have to test and everything, but once you're there, you've passed it. And that's the thing. There's obviously like things you have to maintain over time, but it doesn't mean that they're going to give you the return that you need to. And that's something that I have in my own philosophy from the military, is everything should have a plan of action. So if something's not able to happen, then you need to have a new plan. You don't just say no and then stop working. So this is someone who's trying to get into home ownership, and I'm a firm believer that everyone should be a homeowner. My dad immigrated here and he bought a house. So it's like, I've seen all the financial struggles that I've grown up with and like lived through, and I want to help people. And so that's one big reason why when I do that. So intake, I see a client, we look at the credit. They might not be where they want to be, but what's the plan to get you there? And so building that plan of action, having the follow-ups, doing something like that, because that's the biggest thing, is once people hear that, oh, you can't buy a house now, they see that they've been slapped in the face, but that's not how it is. So you have to, that's one good thing about the military. They have the thick skin to then, okay, well then how can we get you there? It's not a rejection. It's just what can we do to get you to the next step?
Exactly. And I believe, like I said, that's what set you guys apart, because I'm just talking for me personally. I've been through the same situation where you might get a denial letter and you don't know why you got denied. You reading this thing, like you say, and I could have the resource. I could look through it, my credit report myself, but I honestly don't know what caused the denial. And then now you're feeling like is it me? What did I do? Blah, blah, blah. But no, I appreciate that. I really do, because most people, they need that. So,
and I do want to add to the credit thing. I also, this is the same thing as when it comes to executing any plan, right? A lot of people end up shutting themselves down before they even try. And that's been the biggest thing for me, is I was always having that, I forgot what it's called, but where you have too many plans going on and you have too many options. And so you get stuck.
Yeah.
Overwhelmed with what to do. And so then people just don't do it. And that's just a default mode of continuing on, rather than trying to do what, like, a little bit of suffering now and pain, but you learn so much. And that's how my first investment was. But if you do that now, go through the pain, build it, you'll be good for the future. Where it's like, one thing I heard on this one podcast today is home prices will go up. People will find a way. So one case study they did, if you look at New York, I think it was around 6.9 million average purchase price in Manhattan. They're purchasing with cash. So if you think about it, everyone's saying, oh, we're in a housing recession, which we are. And I can go through the numbers as to why, but stuff like that, there's always a hot market. People will transact. And so if you think about it, if they can still get up to that limit, and where we're like, oh, it can't go higher, like than the 450 average purchase price, well then, I don't know. I feel like there's still limit, because on the cap of it, yes, we have limited resources, limited space, limited stuff, but we're always printing money. Once what we've been doing, once we hit a deficit, we print more, and so that then pushes the boundary. And so I try and let people know, like, secure your asset, because this is an amazing product. Of 30 years, you can lock in your rent, versus trying to like plan out, oh, well, I can just rent the next spot, I can use my BAH. Well, then you're assuming that they're going to bump up that BAH limit to the actual rents in that area. And in some cases, they're not. So This is where I'm a big fan of it. You might not get a mortgage at your BAH level. That's a big misconception. People want to like, oh, I'll match my BAH to mortgage. Terrible idea. If you can lock it in for 30 years or for however many years you're going to be at that post, look at what the rent growth is in that area. And if it makes like, hey, it might bump up if it's based off this growth, then you might want to try and look at purchasing and keeping that asset, rent it out for a few years after you PCS, and then sell it about 6 to 8 years down the line.
No, you made a great point, because that also is a reason why most people will not partake in using the VA home loan, because like you said, if I'm a single soldier or I'm a married soldier, well, of course I'm getting my own spot, but if I'm a single soldier, if my VA, I don't want to come out of pocket. That's how they feel. Like, I don't want to come out of pocket, and they don't look at it as an as an investment. They don't look at it as, this money's not just getting thrown away. This money is getting stored into, I mean, you can call it a savings account, you can call it whatever you want, but they don't understand about equity. They don't understand about any of that. And it's dope that you're educating people. And that's the other reason why I do this podcast, to educate individuals. I love talking to them. And it's never just, I can never just give a straight answer to them. I have to give them all the variables around it. Because it's like they want a yes or no. And I can give you that. But you need to think about all these other things, because I already know where your mind's going. Like, you're thinking about not doing it because you might have to pay money out of pocket. You know, but your 50-year-old self's going to appreciate you had that extra 10-minute conversation.
Yeah. And that's one thing too. I don't know if you ever had to move sandbags or fill them while in the military, but it's the same thing, right? So like, working in the military is not easy. But let's say you have the sandbag's all that money that you made from your LES. Well, now you're going to walk on over and then just dump the sandbag at this rental, or you're going to dump the sand into a bucket and keep building that up, you know, like keep the value that you have, like start using that to build your home versus pouring it on someone else's. Like that's where I like to look at it. Because when I was doing that, I'm like, this is hard-earned money. I don't want to give this to some random landlord and build their wealth. Like, I'm going to keep it for me. So
exactly.
Yeah.
And that's a great segue into our last subject, is the investment side of it. Not only that, the home ownership side of it, but the investment side of it. What an E1 to an E5 to, you know, E9, it doesn't matter. What can they do on, I guess, every PCS move? Because I know we're going to talk about, but there's an opportunity you can use. How many times can you use it? What can you do with it? How can you make it benefit and work for you?
If the goal is for building your investment portfolio, so then when you exit the military, you have something to fall onto, then doing it every PCS is an amazing rule of thumb. It might not work out that way for every situation, because you might not have a PCS that's going to be for forever. You might only be an instructor for a set amount of time, for a year, and like maybe you don't want to buy a house or something like that unless you've lived in the area for a bit. It makes sense, but it just really depends on your risk with the situation. I would just say to really highlight how amazing that the opportunity is in that PCS. When you look at other loans and other investors, they have to go the conventional route usually. And with that conventional route, you're capped at 10 homes, but you also have to have a down payment. You also have to then pay so much more in those costs when it comes to being a secondary home as an asset, to where you're now at that 20% down payment. You're no longer at that 3 to 10 or 5%. And 20% is a massive purchase price or cost to get into this home, and not everyone has it. And what you're able to do, if you use it as your primary residence, which you are when you're PCSing, you then have that zero down, like we're talking about. Or if you want to like bump down the VA loan or the VA funding fee that we were talking about by putting something around 5%, like, okay, it drops down to 1.5. So that's great. But
You're absolutely right.
It lets you leverage in that kind of way.
No, you're right. And how many times can you use the VA home loan? Because I think, I mean, you already talked briefly about it, but most people, like I said, they only think they could do things 1, 2 times. And I always say think, because they don't want to ask the right question. They don't want to ask a subject matter expert like Kaneen, you know? So
yeah, I appreciate it. But yeah, to answer the question, in terms of how many times can you use your VA loan, it's unlimited times, but you're capped at how much of the usage at the time. So let's say you have a home that's at 300,000, and this is loosely speaking numbers. There's a formula that goes into it, but we're going to that cap of 806. So you want to go purchase a new home, but you have a $300,000 loan on the other house. So once you PCS, you can get basically around that $500,000 to purchase another home. And so I just say loosely, but that's kind of how it works. So you can reuse it, but you're then capped like, okay, well now I either have to refinance my home, and that's the next strategy that I talk about with our investors, is if we can refinance that second home into a conventional loan as a secondary home, then that at least frees up that money, and you can then purchase a higher amount for that next home.
No, absolutely. And I want to cap it off because I know you're also an investor. You use the VA home loan as well. And then I want to let people know my story really quickly. I've
Yeah,
used the VA home loan multiple times, multiple times.
yeah,
And my first home, I purchased it 115. I actually looked at it yesterday. They wanted 130. I got it for 115, but I used the VA home loan. I stayed in it for a year. To me, it was a live-in flip because the house
yeah.
was moving ready. It was moving ready, but I already had the mindset that I needed to do some extra stuff to get it up to par with everything else on the market. I
Yeah,
did that after a year, some change, sold it, took that money, put it into a commercial property, and then I went and I had to purchase my own primary property. You
hmm,
know, the commercial one I had to use a different loan product, but I ended up getting another VA home loan for a duplex. So
yeah.
now I'm renting out one side, I'm living in another side with my family, and that was I could use it. I don't know before we get to your story because I know, like I said, you're
Yeah.
an investor as well. But that's another thing I forgot to hit is what type of home types can they actually purchase and use their VA home loan for?
Yes, so I did duplex for my first purchase as well, and it was a live and flip before I got my orders, and I had to go to Korea for a bit. And so that's where I rented it out while I was deployed, and it is doable. And so that's where it's called out of state investing at that point, but it's stressful, but that pain was worth it. And so I learned a lot, especially when it comes to real estate investing. That's when I knew I had a passion for it. But when it comes to the actual assets you can purchase with the VA loan, it's a 1 to 4 units. You can go up to a quadplex. And that's where it's a huge benefit where you live in one and then you can have everyone else pay for your mortgage and get some extra fund money, or use it to then build your investment side on the back end to then you can purchase a commercial, you can purchase more residential. So I think it really comes down, there's all these options, right? But you have to go to your reason why. Why am I investing?
Mm-hmm.
And not everyone wants to have like thousands of rental units. That stresses people out.
Yeah.
But maybe they just want to have a few things. If you think about it, I was talking about New York. All these people who have all this money, they're going to keep making money. But then you have all the people. There's a huge wealth gap disparity. If you're not here trying to get some for you, it's not going to get better down the line. Like things will go up. We have inflation. If you look at cost of everything over time, it goes up. And so trying to have something that at least gives you a physical asset that you can then pour your own money into gives you some sort of hedge against the risk in situations of all the volatility going on.
And then so to finish out the segment, so can you go into how you've utilized the VA home loan?
Yes, so I used it for my duplex when I first got here. And then I used some other of that basically funds to then hard money purchase some other, or cash purchases, some other assets, two of them. And then I used my VA loan a second time last year for that as well. So I've done more helping other people in terms of purchasing VA loans than for myself, but I have used it a couple times, and that's kind of where it got me into the fun part of it, where I like helping other people do it versus buying it all the time with me. So eventually I will again once I use a new primary residence. But that's the thing though, VA loan is an amazing asset for primary residence, but if you're trying to do more purchases for investment, then there's other options and more finesse we got to get into to try and solve that situation.
No, absolutely. I want to thank you, Kaneen, for coming on. I
Yeah.
appreciate you. Man, there was a lot of great information. I think we had one viewer the whole time. I believe it was my wife. I don't know, but
Hey, one's better than zero.
yeah, there you go. But no, this was great information, great content, and I believe a lot of people are going to gain a lot of knowledge from it. I've watched other podcasts and other people have conversations about the VA home loan, and sometimes they make it super, super technical, and
Yeah, that's my problem.
that also could be intimidating sometimes,
Yeah.
So, no, I like I said, I appreciate it. You said it in terms that I think we all understood, and then so the last thing I want to do is just hit on what you got going on and how can people contact you.
Yeah, so best way to contact me is my phone number. I'll plug it in somewhere, but that or DMing me on Instagram, other things like that. It's really, those are the two main ways to get my attention, is that way. Other than that, like I do VA loans, but I do tons of other things too. So with this company, that's where we're one of the largest funds for non-QM spaces. So that's trying to get in more self-employed borrowers, truck drivers, stuff like that, people who are contract based. And then we also rolled out a new thing too, where when I first started investing, rent to own was something that I remember Brandon Turner, big investor, talking about, like rent to own. I'm like, well, how do I do that? You got to try and find a buyer who will willingly like let you rent their home and then eventually give it to you for ownership. But then you have to find a lease to contract it, how to write up those things. We do that for you. We have a product where we can build the rent to own for people. It's a government financing where they purchase the home for you, but you at least lock in that purchase price now, and then you can then purchase it later on. Why would people do that? It's for mostly people who have those credit situations where they might need a year or two before they're able to finance a home. But once you can then lock in that home at this price and then assume the loan. Same thing with VA loans. Those are assumable too. There's different situations where that would make sense, especially when you try, or if you know someone who has a home from the 20s to 21s interest rates, it makes sense to assume a loan. So let's say you PCS to a friend's spot, they have a house, they don't want to own it or rent it, you can assume the loan from them. But that comes down to different qualifications that I can speak on. And if you're interested, I'd love to hear from you.
Man, that's dope. He just gave you the last minute. That wraps everything up, man. Those are great products. I'm telling you. So there's no reason why people can't get into this. If you're a soldier, you're nervous, man, pick up the phone, talk to someone, call someone. Don't assume anything. Don't go off of misinformation. Don't go off of what's being said in the barracks.
Yeah, the barracks lawyers, they're good for some situations,
oh
but usually for a home, not so much, because they're still in the barracks.
yeah, exactly.
Yeah.
And then so I also wanted to hit that we do have an event. Kaneen and I, we have an event that we're going to be at the Centennial Club. You talk about that a little bit?
Yeah, so it's the Relocation Fair. It's an annual event here at Fort Bliss. So it's a big event, lots of vendors. It's people who are charities, other stuff like that. So it's not all just vendors trying to, get your money. I remember last year they had Canes there, so they're giving out like free lemonade and gift cards. So it's really cool stuff like that. We'll be there answering questions if anyone needs anything too. So it's a great place to plug and play and kind of see what's available for you in the El Paso area outside of the gate.
Boom. And I'll put information about that in the description box, but that's going to be Thursday, July 24th, 2025, 1300 through 1600. For the ones that don't understand military time, that's 1 to 4 at the Centennial Club. I still remember it. But other than that, do you have anything else, Kaneen, that you wanted to add?
No, I would just say speak to an advisor first before you shut your own self out. So I've had people with no credit. It was a soldier E3, had no credit. 15 days later, we got him credit at 6, up in the 6s. So if you think about it, just don't sell yourself short. Talk to someone.
Yeah, it's absolutely. And also in the meantime as well, like you working on your credit, you can sit down with a realtor. We can go ahead and we look at as many properties you want. I have no problem doing any of that. Educating you as well, and then boom, now you got both trusted advisors having your back, and there's no skin in the game. Like a lot of this stuff is free at this point. There's no cost for this, So just take a second, think about it, and don't overthink about it. Don't have analysis paralysis. Just get going, get started. That's what it is. Don't overthink it. Just do it.
Yeah.
But I appreciate it again, Kaneen. Thank you so much.
Yeah, no, thank you.